Hey, good afternoon, everyone. My name is Jeanmonod, Regional Vice President of Sales here at Angel Oak Mortgage Solutions. Thank you for joining us. Today, we're going to do a deep product dive into our debt service coverage ratio and foreign national programs. I'll introduce, we have a guest today, and then I'll introduce our two subject matter experts here. We usually give about a minute for people to log in, and we'll get started here in a little while. Hope everyone's had a great Memorial Day weekend, and your June is off to a fantastic start. This is going to be recorded. We will get this out to you before end of day today. Everything we're going to do is off of our Angel Oak website. That's ANGELOAKMS.com. So everything's going off the website today. We're going to, after the deep dive, we're going to talk to you a little bit about what we like to look for or not look for, especially in this program on the 1003, what we would like to see as far as credit and credit depth. And then we're going to show you how to get rates and how to submit a pre-qual. And last and probably the best, we're going to show you our marketing portal and how we can help you grow your business. So give it about another 15, 20 seconds. Still a lot of people logging in. All right, I guess we're going to get started here. I know I went through a lot already. I'll keep repeating it during the day. So sit back. This is being recorded. So I'm going to introduce my manager, Tom Hutchens. He's EVP of production here at Angel Oak Mortgage Solutions. He's going to give us a little bit of an overview of non-QM space. Tom, take it away.
All right, great. Thanks, John. Thanks, everybody, for jumping on and joining us today. I just asked John if I could say a couple words about really kind of what we're seeing in the market in the non-QM space. We just had the MBA secondary meeting in New York a couple weeks ago, and I'm just, kind of wanted to just report on the space itself. And it was really extremely positive. The mortgage business has been a challenge for the last 12 months, just based on the rate environment and certainly the volatility of the markets. And in non-QM, that matters. The volatility matters as much as anything, just from a investor standpoint. But investors were very anxious to meet with us and talk further. If you don't know, Angel Oak, we've been doing this non-QM for over 10 years. So we're not new in the space. We've been solely dedicated to it during this entire time frame. We'd like to consider ourselves experts, and you're going to hear more from Oscar and Christy, the actual experts in the space, because they're out there doing that every single day. And but really, the thing that hasn't changed out of the market, I know so many originators right now are really looking for those purchase transactions, because that's where the business is that the underserved borrower, the self-employed, the investor, those borrowers have not gone away. And the good news is they're really not as rate sensitive as an agency borrower. Agency borrowers, you probably lost a loan over the years because of an eighth in rate and things like that. The non-QM, and you're going to learn more about it, but the non-QM space is really just about solving problems and helping a borrower purchase or refinance a property that they otherwise didn't think they had an opportunity to do it. So we're very optimistic about the remainder of 2023 and going forward. Always seen non-QM as about 10% of the entire origination market, and I think we're on our way to achieving those numbers. So I commend all of you originators for joining this webinar. That's kind of the first step in my mind, is that you just have to get a comfort level with what non-QM is and know what type of borrower to be looking for. And then you've got account executives like Christy and Oscar that can help you reel those borrowers in and take you through the process. So you don't have to be the subject matter expert right out of the gates, but you'll find after you've originated a few of these loans that you are an expert, and then you can become that non-QM expert in your market and go out and expand your referral base. So that's it, John. Don't want to bore anybody. Just wanted to say hello and say thanks.
No, Tom, I think that's great. We're almost halfway through the year, and, market clarity, everything in the market. It's always great to have, information from you at the level, and just being in New York, I think is great for sharing. So, everyone's hot about AI these days, right? Well, we got RI here, right? Our real intelligence, our subject matter experts. We've got Christy. Please introduce yourself.
Yes, thank you. I love that introduction. I am Christy Best. I am an account executive covering the San Antonio area, and I just really do want to just echo that appreciation for y'all joining today and giving us a chance to just provide some education and information on non-QM.
Yeah. And then Oscar is usually a familiar face on this. Oscar, please introduce yourself and give a little bit of your experience too, Oscar.
Hey everybody, my name's Oscar Ungo. I'm an inside account executive here. I've been with the company since 2018, so near 6 years. And I'm really happy that you all are joining today because we've made some exciting enhancements to the debt service coverage ratio program, which is really going to help you expand your net to capture more borrowers and add more value when you're visiting your realtor partners to educate them on how they can grow their own business with a debt service coverage ratio loan and a foreign national loan.
Yeah. So I've already got a shout out to Carlos. AJ, thank you. Carlos is a great account executive, so thank you. So just to put some ground rules here again, this is being recorded. We will get this out to you before end of day tomorrow. This is interactive, so put all your questions in the queue there. We will get to them. If we don't get to all of them, we will have your account executive reach out to you as soon as possible. So, but before we get into the deep dive here, we usually like to take a poll question. So the poll question is, who has originated a debt service coverage ratio program in the last 12 months? And while everyone's voting on that, I wanted to share a little bit of intel in that investor space. 34% of the properties owned in the US are owned by investors, and 70% of those are single family. So, that's a big, or I'm sorry, 70% of those are individuals. I apologize for that. So that's all your borrowers out there. Getting them in. We're going to teach you how to probably do the easiest loan. What are the results here? Can you guys see that? Wow.
Yeah.
That's changed a lot from the one we did about 2 months ago. 79% of you have not originated a debt service coverage ratio in the last 12 months. This is a huge opportunity for the 21% have. Hopefully it was a great experience. So thank you for joining us today. We're going to jump right into this. So Christy, give us some highlights of our debt service coverage. People refer to it as a DSCR. We call it internally investor cash flow. Take it away, Christy. Thank you.
Yes, thank you, John. So the I think the screen just changed, John.
Yeah. Sorry.
No worries. I probably could just go off memory. While we wait for that to get fixed, the debt service coverage ratio loan, what that allows you to do is, instead of using personal income and employment history on the borrower, we're going to use just the cash flow from the property. So we're going to be qualifying that ability to repay using the cash flow based on, in the case of a purchase, on what the appraiser gives us for the market rent analysis.
Christy, I'm going to interrupt. Can you guys see the screen?
It's still on the poll.
Okay. I might need a little.
There you go. That's back.
Perfect. Got it.
John was testing me. He wanted to.
I'm blessed, Christy, and I apologize for technology. Go ahead, Christy.
A few things on this. And there are a lot of enhancements. Oscar touched on that earlier. So if you've seen this before and you're noticing that there are some new tabs there, some new bullet points, there's been some great expansions on this program. So we're going to go as low as a 680 on the credit score. And the max LTV is going to be an 80%. You do need a 700 to get them to that 80%. But again, the great benefit is no income, no employment, no DTI to calculate. At Angel Oak, we love large loan amounts in general, and that's going to be reflected on the DSCR as well. And we do see a lot of large loan amounts, on this program, especially near lakes, near water, near, oceanfront, that sort of thing. Minimum loan amount is going to be $75,000. Again, we're qualifying using the cash flow into the property to satisfy that ability to repay. No income, no employment. I find I repeat that a lot because that is something that we're, not used to, but we're not going to be looking at income or employment or calculating a DTI. Something else that investors really find attractive about this program is being able to close in an LLC. And that's something that is exclusive, to non-QM, not something you can do agency. And again, no limit on the number of properties. So there's no limit on number of properties that the borrower can own or even have financed. One thing with this, the first thing we're probably always going to ask you as account executives when we're looking at this is, does the borrower own a primary residence? We want to make sure that this is truly an investment property, and one way to do that is to verify that they already own a primary. You are allowed to do these, of course, of purchases, but also on cash outs and rate and terms. I think we see a lot of them, coming in from hard money sometimes, where somebody isn't familiar about this program, so they'll refinance or they'll take cash out of 1 or 2 properties and buy a couple more. So that's another thing that's really great about the DSCR is we tend to see them in packages. There is a 40-year interest-only option available on here. Non-warrantable condos are allowed on here. That's something we can get into details individually with an account executive on what would be allowed, but we do have non-warrantable condos. And condo towels, that's a new recent expansion. I know that means a lot to the guys in Florida for sure. We see a lot of those, so we do allow condo towels as well. And then another recent enhancement I know a lot of brokers have been excited about is that business purpose that allows you in these specific states where you may not be licensed to still offer a DSCR, investor cash flow loan.
Yeah, thank you, Christy. Great job. Again, this is being recorded. We will get this out to you before end of day tomorrow. One of the things why we do these deep dive product webinars are just to answer a lot of your questions. But, Oscar's going to go into right now what we want to see on a 1003, because it's really important that we get these borrowers, closed as quick as possible. So, so Oscar, tell them what's going to make their deal close faster and quicker with Angel Oak.
Absolutely. And, this is something that Tom actually highlighted earlier. We're going to make sure that you become an expert on this program if you haven't done a DSCR loan yet. But one of the great things about working with us is that you're going to work hand in hand with your account executive. And we're going to review your 1003 and credit report prior to you submitting the loan. So we're going to check if your client meets the initial requirements, just the standard requirements. And you can send us a TBD property. So for starters, Christy mentioned this, the borrower has to have a primary residence. So something that you want to list on the application is their current address. We want to make sure that they own a home and that they've been able to pay a mortgage for at least 12 months. Because we're going to double check, we want to make sure that the property that they're trying to purchase is a true investment property. Another thing that we want on the 1003, well, actually, I should say, let's just start with what we don't need on the 1003, right? We don't need personal income, and we do not need employment. So right off the bat, that makes it a much easier application to take. Liabilities are probably going to transfer over anyway, because we will need credit. And then my light turns off.
It's okay. This is live, by the way. This isn't recorded. This is live.
You're going to want to make sure to add the properties that they do own on the real estate schedule. However, if those properties aren't, if title's not in their name, if it's in a business's name, and if the loan is not in their name, it's in a business's name, like an LLC, then you don't have to put it on there. It's just going to make it easier for you. It's going to make it easier for the underwriter. It's going to make it easier for all of us. But if the properties are if title is in their name or the loan is in their name, then you do want to have that loan on the REO schedule. As I mentioned earlier, you can have, if you can't send the 1003 with an address on there, you can have a TBD property, but you do want to share that with your account executive. And later on, we're going to show you how you can send your 1003 and credit report through our Quick Qual portal, which you don't need a password for. And in there, you can input the subject property address in the notes box.
Yeah, thank you, Oscar. Yeah, a lot of, one of the things I want to answer here, Christy, before we go into what you're going to look for on the credit, Mike's asking, do we have a list of states I can close my DSCR in even though I'm not licensed in? Yes, Mike, again, everything's listed here on our website. So we have Colorado, Florida, Georgia, Indiana, Louisiana, New Mexico, Ohio, Oklahoma, Pennsylvania, South Carolina, Washington, and Wisconsin. So Mike, hopefully that answers your questions. We just rolled that out, as Christy said earlier. So Christy, cover what you look for on the credit report, trade lines, experience, not experience. Take it away.
Yep. So the first thing that I look for, and something we're always going to look for, is does the borrower meet the minimum trade line requirement? So we're going to need 3 trade lines with a 12-month history, or 2 trade lines with 24 months of history. And they do have to have activity in the last 12 months. So that's the first thing that we're going to look at. We're going to look at potential, do they have any bankruptcies? Do they have any foreclosures, any deed in lieu, anything like that in the past, because we do require a 48-month seasoning on that. I think that we are, fairly aggressive, with allowing a little bit of consumer issues or lates in the past. They can have 2 30-day lates on their consumer history in the last 12 months.
I'm going to interrupt you there. Repeat that again, because I think that's critical, because stuff happens. Maybe the renter didn't pay on time, or maybe they're a direct deposit to the landlord's account. So repeat that, please.
Yeah,
sorry.
Bad things happen to good people. So for sure.
Yep.
And I think that we're always looking at these loans in a holistic way.
Christy, Christy, time out. You drowned it out there a little bit. So
did I? Went underwater for a minute? Okay.
A little bit, yeah.
So we do allow for, like I said, bad things can happen to good people. So if somebody has, 2 30-day lates on their consumer history in the last 12 months, that's going to meet the guideline. And we're even going to allow, maybe they had an issue with a mortgage and they have a 1 times 30 on the mortgage this year, but their prior 24 months of, the prior 12 months or 24 is looks good, then we allow for a little bit of leniency there. So we're going to be looking at, do they meet minimum trade lines? Do they have a mortgage history reporting? Sometimes they own a primary, but it's free and clear, and that's something that we can still work with, with taxes and insurance to show on time. And we're going to make sure any foreclosure or bankruptcy seasoning has been met.
Yeah, and guys, I hope you could, when I talk about subject matter experts, our AEs, not just Oscar and not just Christy, across the country, are truly subject matter experts. They look at a lot of deals, and if it doesn't meet our guidelines, that doesn't mean it cannot get done. 30% of the loans we close at Angel Oak do not meet our guidelines, and it's because of Oscar, Christy, and all the other account executives with the great experience across the country that they find those second, third questions to ask to get a yes. So just want to make sure we're talking about that. AJ, this is amazing. AJ, yes, it is an amazing program. But yeah, working with Carlos has been here 9 years. Carlos will make sure he can find an answer out to you. We'll get Carlos in touch with you, AJ, after this. So, excuse me. Got a lot of great questions come in. Oscar, I'm going to throw this one over to you. They're asking about DSCR and how do we calculate it. And for the longest time, I didn't even know we had these tips and tricks down here at the bottom of the page. So, talk about some of the different DSCR groups that we have.
Sure. So yeah, we actually have this on the fact sheet at the bottom of the page when you click on the debt service coverage ratio program. So it illustrates essentially how it is calculated really easily. I'm going to start with a purchase as an example. So let's say that your client's buying a single family home. You're going to order the rent schedule, and the appraiser is going to designate what the average market rent is on that appraisal. When the appraisal returns our underwriter, they're going to divide the rent by the PITI or PITIA. So let's look at a few examples. If the rent is $1,100 and the PITIA is $1,000, that's 1.10. So that means that you've got positive cash flow. If they're both equally $1,000, that is 1, and that means you break even. But let's just say that the rent comes in at negative, because that can happen. Well, as long as your client has a 700 FICO score or greater and the loan to value is at 75% or less, then like we like to say is that you essentially, this program is almost bulletproof because we allow negative cash flow. So some of the things that Christy and I and your account executives are going to review when they're looking at the 1003s and the credit report, you know, we're going to look for these things and we're going to let you know when we send you what we call our quick qual, which essentially are your findings, right? We're going to have a conversation about this and the possibilities. So we can price things out, and that way you can communicate that with your client and set proper expectations. But we do allow negative cash flow, and the client can choose to waive the debt service coverage ratio. Now, what we're finding is that there are many ways of restructuring. It's a non-trib loan, so your client can buy down the rate, which is what a lot of borrowers will do in order to break even. Or, you know, we can switch it over to interest only and see whether or not with an interest only payment, because we can use the interest only payment for DSCR, the DSCR, maybe that'll help us. So there are plenty of ways of structuring this loan. Now on a refi, which are really exciting, refis are really exciting because they make it easier for you. You just have to ask your clients, right? The property can't be vacant. So what is your current lease agreement? And collect that current lease agreement, ask them if they can give you 3 months of rent receipts, take that figure, and then go to our quick quote, which we're going to show you next. Make sure that you have insurance and taxes, any HOA dues, if there are any on that property, and then do the math. And if you've got positive cash flow, then you know that you have a loan, as long as they have the credit, as long as they have the assets, which actually I did not mention, but we want assets on that 1003. And I don't know if I'm gonna be the one. I want to be. I guess I'll be the one to announce it. With assets, we allow gift funds.
Yeah, that's another new enhancement. So repeat that again, Oscar. I think just, you know, because we have for the longest time have not. So please repeat that.
So I hope I didn't steal anybody's thunder, but we do allow gift funds. We do allow gift funds on our debt service coverage ratio program. So as long as 10% of the borrower's own contribution is in the loan, we do allow gift funds. It must if they're receiving a gift, it must come from a family member.
Yeah. And that's a big point, you know. So Christy, I'm going to throw a couple questions your way. One, reserves. You know, that was a question here about reserves.
Yeah, I love that question because I was actually thinking we need to highlight the reserves because we're going to be looking at 6 months reserves on the subject property only, which can really be beneficial, especially with a borrower that owns a lot of properties. It can be challenging, you know, to meet reserve requirements on all of those properties. So for us, it's going to be 6 months on that subject property only.
So Christy, you touched on what if an investor had a lot of properties and we're not going to require reserves on that property, but do we allow this for the first time investor?
Absolutely, yes, and we get that question a lot. And interesting, you know, with those other properties, we want to see them, but we're not concerned with whether or not those properties cash flow. We're just concerned with whether this subject property cash flows.
Yeah, so you know, again, both Oscar and Christy are making some great points. So I want to reiterate a couple things that Christy just said. You know, we're not looking for lease agreements. We're not looking for anything else, tax returns on those other properties. We're just how that subject property cash flows, which I think is incredibly important there. Oscar, talk a little bit about the LLC. I know that's always a big question we get.
It is a big question because a lot of investors want to vest title in an LLC to protect themselves. So we can vest title in an LLC. All parties on the LLC must be on the loan, but we have no seasoning requirement for how long that LLC is open. So let's say that you have a client who asks you, well, can I vest title in this LLC? And you discover that they have another person on that LLC, and they don't want that partner on the loan. Well, they can just create a new LLC for the purposes of managing real estate, and then at closing we can vest title in that LLC.
Yep. Christy, prepayment penalty on this program?
So there are options there. There's, you know, kind of standard is the 3-year. There is an option to take a 4-year for a rate incentive. And then again, there's the option to buy it down to a 2-year, a 1-year, or there is an option to buy it out entirely, but there are some restrictions there as far as there's no yield spread allowed on those if you buy it out entirely.
And Christy,
And we do have a, oh, sorry, John.
No,
It's
go.
about 6 months of interest, but what we'll share with you is we have a calculator that we can share with you if you want to give your borrower that exact dollar amount on what that prepayment penalty is for them on that loan.
So Christy, I'll ask you one other question. Oscar mentioned this earlier, that on a cash out, it cannot be vacant, but Lane's asking on a purchase, can the property be vacant?
Absolutely, yes.
That was kind of a softball one, Christy. So.
Give Oscar the really hard ones.
No, they're all. Oscar, how many units can we lend up to?
You can lend up to 4 units.
Yeah. So,
Now.
But stay tuned. That could be changing real soon. So, and that brings me to a point where it's really important to work with your account executive, because you might read something yesterday and it changes tomorrow. So it really, I mean, we do a great job sending out emails every week that on recent enhancements and stuff like that, but it's really critical that you call your Angel Oak account executive first, because they're going to, 1, answer the phone, 2, know the answers, and if they can't do it, they're going to probably tell you where you probably could get it done. So Christy, another question here. Is this a fixed rate? What is this? I know you touched on interest only a little. Well, first, answer the first, and then the second one would be, let's talk about interest only and how it works.
Okay. Yeah, so we only offer fixed programs, so it is going to be a 30-year fixed loan program, and we do have the interest only option. And that's that other recent enhancement that Oscar mentioned earlier, that we can actually qualify using that payment. So both of those are going to be 30-year loan programs.
Yep. And then just break out how the interest only works.
Oh,
how long?
Sorry, loan amount times interest rate divided by 12.
Yep. Yeah. So thank you there. Oscar, we do allow short-term rentals. Can you just elaborate a little bit on that, please?
We do, and I'm glad that that question was asked, because we talked about, I mentioned a 12-month lease agreement and rent receipts earlier when I was referring to refis. But what if your client has an Airbnb property and it's generating a ton of revenue for them? We can also look at that transaction history as well in order to use that for the DSCR. But yes, we do allow short-term rentals if your client's looking to purchase one. And that property in that area happens to be a vacation area where the appraiser designates that there is short-term rental income, then we can apply that. And like I said, on a refi, if your client has had this property and they've been generating short-term rental income on it, they just have to download the 12-month Airbnb history on it if they're using Airbnb, for example, and then just show us a proof that's being deposited into your account, and that's it.
Yeah, Christy, another great question here. Talk about cash out. How long does I can't remember the seasoning in order to do a cash out off the appraised value? Sorry, that's a senior moment there.
In order to use the new appraised value, they have to be in the property for at least 6 months. And if it's more than 6 months and less than 12, we are going to order a CDA to make sure that the value is there. So yeah, that's how that is. And one thing on the cash out is that the cash out can be used towards meeting those reserve requirements.
When Oscar talked about this earlier about, a lot of, or maybe it was Christy, I apologize, but you talked about hard money, taking, people out of the hard money that they had to purchase this investment property for. So, look at, and a lot of these deals, and Oscar mentioned this, come in multi-packs, right? So you can, I always use, Stacy Flanagan's example. She did a 10-pack and cash out on all 10 so the investor could go buy more investment properties. So that is always you're building your future pipeline on that. So before we jump into foreign national, Oscar or Christy, anything else that maybe wasn't asked here that we can cover? Christy, anything or?
No, I think we did great. I think Oscar and I just covered it all, actually.
No, you guys really did do great. So
I want to elaborate on something that you mentioned there, John, just to give everybody an idea. So, and Stacy's example you mentioned is a great one. we see, because you're going to be helping people who are used to purchasing properties. So on the purchase side, it's very common for us AEs to get 1003s where we recognize a borrower's name. You know, we're getting that from our loan officer and recognizing that borrower's name because it's a return customer for them and they're looking to purchase another property. So on the purchase side, yes, you're going to get customers that may buy 1 or 2 properties at once, but you're going to have a return client using this program. On the refi side, you're definitely going to see, we're used to seeing over 2 refis for 1 borrower at once. So it's a great way of building your pipeline very quickly because like we say, you're also working with people who may have used a hard money loan to purchase a couple properties. They may have blanket loans they want to refi. These hard money loans aren't meant to be long-term financing. And we offer the same solutions, similar solutions. So the reasons why they may have needed a hard money loan transfer over to the reason why they may need a debt service coverage ratio loan, which is long-term financing. We can get them something 30-year fixed or interest only. So it's a great program to have in your tool belt.
Yeah, and Anna, Oscar's going to take us through the foreign national program, so he'll hopefully cover some of your points here. If not, we'll definitely get them answered. So Oscar, give us some of the highlights of our foreign national program. Sorry.
All right, our foreign national program is a subcategory or housed within the debt service coverage ratio program. It makes it even easier. It's more straightforward because we don't need credit, right? So we don't look at credit. It's really a asset-based program and DSCR-based program, where the big difference is that the DSCR must be 1-to-1. It cannot be less than 1. Okay, so 1-to-1 or greater. The max loan to value is 70%. And a really important piece that's going to impact your closing timeline is how long these funds have seasoned in a US FDIC insured bank account. We require 30-day seasoning minimum. So this is up to the closing date, right? A total of 60 days. So they could have been moved from their foreign account into a US account, but the moment that they move into this US account, they have to season a total of 30 days. So that's a really important question to ask your client and collect those documents. The other really important piece is the 12 months of reserves that we require. Those can actually stay in the foreign country.
That's big.
And a fantastic thing, about our foreign national program, which is really streamlined, is that we don't require tons of documentation that a lot of others do. We're not going to ask for credit reference letters. We're not going to ask for mortgage reference letters. It's a very straightforward product.
Yeah, so Oscar, hopefully you answered Anna's question. So Anna, no, we're not doing credit scores. We're not building credit for you. We're not, trade lines? There's none of that. None of that is required, Anna. So Christy, what if they don't have one of the visas? What else will we lend? Who will we lend to that doesn't have a visa?
So we do see a lot of these buyers from Canada specifically, and it is a visa waiver country. So if they're living and working in Canada and they don't have a visa, they can just use a valid passport. And there are a list of other countries as well that are considered visa.
And it's about 32, 37 of those countries. So yeah, it's a really easy program. Go back 1003, we, just like Oscar mentioned earlier, no income, no job, just assets listed on there. One thing I did learn from another account executive also, if you are putting those assets here in the US, if they can, put a little extra, right? Put a little extra in that account just in case it doesn't debt service coverage ratio. They might have to put more down, and then we won't have to start the clock ticking over again. So again, these are the type of experts we have at Angel Oak that I learned from her. So that's great. Let me see if we have any.
John, just one thing, and I apologize if I missed it, but I wanted to mention, we're not talking about I-10 today, but often I-10s and foreign nationals get confused. So just remembering with the foreign national, this borrower lives and works outside of the United States.
Yep.
And that's really that first step to make them
aware. That's a really important point.
Yeah. And Samantha, we're going to talk about our marketing portal, but I'll specifically talk about foreign national here. With all this geopolitical unrest going on, a lot of foreign nationals are sending their children here to U.S. universities. And so maybe just think outside your head, maybe market the foreign national around big universities wherever you live. So that's one tip. We'll talk about some other great tips when Christy goes through our marketing portal. Let me look at, could you please repeat the reserves requirement? Oscar, I'll throw this out. Please repeat the reserve requirements for the DSCR and foreign national.
Okay,
Sorry.
so on the debt service coverage, let's start with foreign national. On the foreign national program, we require 12 months reserves on the subject property only, and the reserves can stay in the foreign account. We will require, all assets for closing in the U.S. account. Now, if a person is a U.S. citizen or permanent resident alien or non-permanent resident alien, and they're going to be using the debt service coverage ratio program, then we only need 6 months reserves on the subject property.
And Christy mentioned that earlier. Another key is no other reserves for other properties that they may own. So just want to make sure. Yeah, there was a question here. It's been answered. Non-warrantable condos. What's the Christy? I'll go to you on this. What's the most one single entity can own for a non-warrantable condo?
So that's 20%.
20% is correct. Ding, ding, ding.
I was making sure I was thinking the question. I'm like, wait. I was thinking, concentration. I'm like, wait.
No, but everyone says, well, that's what Fannie does. But Fannie may not allow 100% concentration of investors in that condominium complex. So just make sure you're clear what one entity versus the entire 100 units can be all owned by investors. So I just want to make sure we're clear on that. There's been questions here, Oscar. We're about 20 minutes to the top of the hour. Questions on rates, questions on how to get pre-quals. So let's go back to our homepage, Oscar, and let's talk about how to get rates and how to submit a pre-qual.
Perfect. So the best way to get a rate, we always say not a single loan that funds here doesn't start with this one step. You want to go to our non-QM quick quote to get pricing. And guys, pricing can change daily. So this is a must-have page that you bookmark. You can find the quick quote right in the center of the screen. It has the check mark on it and it says non-QM quick quote. So when you click on it, it's going to take you to our page. It'll default to broker. And you want to start by entering the basic loan amount and the rest of the fields.
So Oscar, tell them why we asked the property state.
We're going to ask the property state because, some states are going to allow you. We mentioned earlier that you're allowed to do business purpose loans in a state that you're not licensed in, but only in some states. So it will ask you that question. But also, there's some states that have do not allow prepayment penalties, which is something that you also want to discuss with your account executive. When you're done filling everything out, one really important thing is when you get to income documentation, it's going to default to full doc. So you want to make sure to choose DSCR investor cash flow. And once you do, it's going to ask you if you have an active state license just below where the subject property state is. So you want to click the drop down. And in this case, let's choose yes. And we're going to leave this as a purchase. As I mentioned, it'll ask you the prepayment penalty, which we discussed. You can either keep the standard, or you can choose to buy it down or buy it out. If you choose to buy it out completely, the loan can only be borrower paid. And the compensation type defaults to borrower paid. So this is something that you also want to discuss with your account executive. The differences between borrower paid and lender paid, and they'll be able to review that with you. So let's just use borrower paid for now. And when you click on the view rates button in blue, it's going to show you the full rate stack. And at this point, you can choose whether you're going to be giving your client a credit to reduce their total closing costs. So anything priced above 100, or a buy down of the rate, which would be a cost. So anything below 100. So this is a step to price things out. But if you're going to be sending your 1003 and your credit report to your account executive, you want to choose one of these options. This doesn't mean that you're locking in a rate. You're just giving your account executive an idea of what you want to use. Then you're going to click on select option in blue, and you can scroll up. This page sometimes does look blank, but when you scroll up, you'll see that it's going to ask you for your minimum 3.4. If you don't have access to this, you can actually skip it by clicking next. And this is the final step. So you want to make sure to click the drop down and choose your account executive. If it happens to be me, you just have to type O on your keyboard and it'll select me right away. And then you'll fill in your information and upload your 1003 and your credit report in PDF format. And if you scroll further down, earlier on when we were reviewing the 1003, for those of you who can't print the 1003 to PDF format with a property address on the application, a subject property address, then please add it to the additional comments box here for your account executive. And this is also what we call the confessions box. So if there's anything else that you want to tell us, then this is for our eyes only. So go ahead and throw it in there for us. That way we can make a good decision. Ultimately, we want your loan to close easily and quickly, just like you. And when you're done, click submit on the bottom right. Just wait for it to say successfully submitted, and that's it. I mean, your AE should get back to you within 24 hours on a debt service coverage ratio.
Yeah, Oscar, you jokingly said, like this is your confessional booth, but it's true. Your account executive wants to work with you. And when I say work with you, confessional booth, it's really to make sure that your referral sources are protected, your borrower is protected, that this loan is going to actually close. So tell them everything. If it fell out of agency, tell them why. I mean, they're going to help you position this loan for the best success and quickest closing. So we joke a little bit about that internally, but we really do mean it. We understand how business is there's a lot less business than there was 2 years ago. So we want to help you make sure that you solidify your referral relationships, and not only that, you get a good referral from your borrower. So Christy, we've had any other questions regarding pre-quals? Oscar, you mentioned on this, you should get it back in 24 hours. If everything's filled out, as we mentioned on the 1003, or really not filled out on the 1003, and the credit report is clean. One other thing, if we do have questions or it doesn't meet our guidelines, we will go to a help desk before we issue a pre-qual. I commend Christy, Oscar, and all of our account executives across the country that have an extremely, extremely high pull-through rate. So, we don't need, our underwriters don't need practice in underwriting files that don't have a chance to close. So that's all from there. Christy's going to take us through the fun part. Sorry, Oscar, but this is the fun part. But we're going to include Oscar in a lot of this fun. So, as Oscar mentioned, you don't need credentials to submit, to contact and look at rates there, or even submit a pre-qual. But you do need login credentials to get to this access to our portal, to access this great marketing tools that we have. So let me type in some stuff here.
John, while typing that in, I just kind of wanted to, again, just echo something that Oscar and you had both touched on. And I guess I've reached the point in my life where I have cheesy sayings, but I say it with sincerity, and I think that this is echoed absolutely by our other account executives, is that when you send a loan to Angel Oak, we understand you're trusting us with two really important things that John and Oscar touched on. And the first is your reputation. You're trusting us with your reputation when we say that we can do that loan. And secondly is, part of your paycheck. And I think that we do really take those things seriously. And that's why we want to know everything about that loan so we can appropriately guide you through the process. And if we say that's a loan we can do, then that's a loan that we can do.
Yeah, and one thing I realized we touched on it, Christy, during, I don't want to make sure we didn't glaze over it. We will do condo tells. And Christy mentioned that it was a recent enhancement. So just want to make sure, everyone knows, because for so long we didn't. So I want to make sure everyone knows that we do condo tells. So thank you for pointing that out. So Christy, go ahead and let's start talking about marketing.
Okay. John knows I love the marketing section, so he so graciously allows me to take the lead on this one. But I think the thing that I love about our marketing portal.
Christy, get a little closer. Sorry.
Can you hear me?
Yeah.
Okay. Okay.
Yep.
The thing I love about this the most is really that Angel Oak chooses to invest in our relationships with our brokers by providing you with tools that make it easier for you to build your business, and specifically your non-QM business. And also, this marketing material can be a great way to train yourself and prepare yourself to present on these products or meet with referral partners and speak intelligently on the programs, because there's a lot of tips in them. So you'll find when you log into the portal, you're going to start at that marketing portal tab. And I guess we can just start from the top, John, and start with the presentations, or
let's start with flyers. Let's do it.
Let's start with
flyers.
Okay. So this is an excellent tool for you, again, if you're new to these programs and you want to print this out for yourself and have it up on your board, so you can speak intelligently and kind of use it as a little reference point. But it's a great option for marketing, especially if you want to drop by some realtors' offices and let them know what you do. You come in here and you're going to customize this. And the first thing you're probably going to notice, or I hope you notice, is that you don't see anything about Angel Oak on here. This is us investing in you and giving you a marketing tool that helps you to build your brand, not the Angel Oak brand. So you'll be able to come in, customize it, put your own logos in there, your photo, all of your contact information, and then you can save it and send it out via email or print it. Today we're talking about the investor cash flow, but another great thing about the portal is once you put that information on one flyer, it's going to save in there and it's going to auto-populate to all of the others. So you won't have to, re-enter the information there. And it's going to give you a good high-level overview and some great, program highlights that you can share with your referral partners.
Yeah, Christy, I've seen in the past, I've even seen loan officers co-brand this with their realtor.
Yes.
So that's just and again, and Oscar, I'll bring you in here. How much does this cost the loan officer?
Zero. But it does cost you something if you don't participate in it 100%. I mean, so it's, you want to utilize this. You do.
Mm-hmm.
Yeah, I like that. That's a great line there, Oscar. Christy, let's talk about the next one we created for them.
Social media, like one thing that I think, we recognize is that y'all wear a lot of hats as an originator. You're trying to manage your pipeline, get new business, market yourself on social media. And so hopefully this takes a little bit of that off your plate and makes it a bit easier, because this is all ready to go. You're going to download and save an image depending on what it is that you're marketing that day. And you can even cut and paste the verbiage and put it on your, your Instagram or your LinkedIn or wherever it is that you're focused, or all of them. And the verbiage is already in there. Of course, you can edit it and personalize it, but the idea is that this helps you to get these programs out there, let your referral partners know that you are a one-stop shop for all of these programs, and really educating your referral partners on what's available out there.
Yeah, Christy, and again, you mentioned everyone's busy, everyone's trying to capture business, but we've done this all for you. Here's investor cash flow, debt service coverage ratio for borrowers. So you can put on your LinkedIn or your Instagram or Facebook for borrowers. And then you can post something else towards realtors. So it's really powerful stuff. Don't overthink it. And I love the line Oscar just came up with. What does it cost you not to even try this?
Mm-hmm.
It's just, I kind of, Christy's going to say, oh, don't do it, John. I kind of get worked up because people don't take advantage of it. You're going to get off this call and you're going to go back to, your regular ways. And this is going to help you grow your business. We promise you. So then we also have these whiteboard videos. I won't play one. Go ahead, Christy. I'll let you talk about it.
Yeah,
Sorry.
These are great too. Again, even if you are preparing to meet with a referral partner and you want to watch one of these videos, it's going to give you some good information that you can share. And they're short, they're about a minute, to keep attention, but they're going to give a really good overview of what we offer on these different programs. And again, these are also not branded with the Angel Oak brand. These are going to be I mean, these have no brand, but this is an opportunity for you to brand yourself as an expert in non-QM.
Yep. And then the last,
My favorite,
yes,
the realtor presentation.
everyone's.
So the great thing, this presentation has been created for you. It is editable, so if there are things that you don't want to talk about or you find it's not a great flow for you and you want to make some changes, you can definitely do that. It is, you can personalize it. If John, if it's easy for you to just download that, you'll see that you can put your own logo in there. Again, it doesn't have Angel Oak on there anywhere, but it's going to walk you through what is available in non-QM and how ultimately it benefits the realtor, you know, specifically in how it can increase, you know, their income, you know, if they can work with these buyers as well. And I think one of the most important things to touch on here is that your Angel Oak account executive will do this presentation for you. We will happily do this presentation for you. We show up, you know, as one of your investors. John loves to say it. We're in the witness protection program. We don't mention Angel Oak. We're just there as your investor to present on what non-QM is, how it's an untapped market, and how it can allow those realtors to increase their closings by working with someone like you that is a professional in non-QM.
Yeah, Christy, this is another part of our business that people don't take advantage of, us being the subject matter experts. We will go in, we will present on your behalf. We don't say anything, we drive everything. We've had Anna on here. I'll give a quick example using Anna because she asked a lot of great questions. So we'll go in there, Oscar, Christy, all of the account executives across the country go in there, and we're presenting this to your referral base, right? And I'll say, hey, realtor number one, you know, what are you going to do when you get a loan like this? You're going to call Anna. We're just one of Anna's investors, and that's all we say. We don't say anything else, but Anna has access to these programs in our relationship. But what are you going to do when you get a borrower like this? You're going to call Anna, and that's all we do. We drive everything back to you. They're your referral source, not ours, yours. So, Oscar, I know you're chomping at the bit to get some stuff in here because you do a lot of these too, Oscar.
We do, and it's really, at the end of the day, it's a trickle down effect, right? We are educating you, and you're going to educate your market, but we're also here to be your partners to do the same thing. So, you know, after this post call, I hope that you all download the marketing material. I hope that you post it on social media, on Facebook, on Instagram, because you don't know who's looking at the end of the day within your market. And I hope you take advantage of some of the expansions that we've made, because we've listened. We know that you want to widen your net. So we've rolled out non-permanent resident alien on the investor cash flow program. We're allowing gift funds now on the investor cash flow program. We're allowing short-term rental income now on the investor cash flow program. And we've rolled out condo hotels on the investor cash flow program. And all these enhancements have been made. Man, I mean, it feels like it was all done within a day, right? It's
yeah. Oscar, that was great, because there's always enhancements coming, and there might, I don't know, but there might be a couple more tomorrow. So we'll see. So I know Xavier's asking a question here: how do you get your credentials? Xavier, you know, I'll give my email address. It's pretty easy. I'll get you in touch with your account executive. My email address is just John J. JOHNJ at angeloakms.com, and send it to me. I'll get you in touch with your account executive. We'll get you credentials signed up. They're excited. Xavier, I hope this brings you, and it will bring you, much success. I'll throw out a stat. We do a couple of housekeeping things here. We're ahead of time here, but I do still want to be respectful. 2 weeks from today, we're doing a deep product dive into our bank statement program, which is our most popular program, which, if you get your referral sources in front of you, 9% of the loans we close underneath our bank statement program are realtors. So get your realtors in a room. If you get 12 of them in a room, you're probably going to get one of their bank statements, and I promise you'll probably get a DSCR out of them also. So, but next 2 weeks from Thursday, June 21st, noon Central Time, 1 o'clock Eastern time, we will be doing a deep dive into our bank statement program. Also, what was I? Almost forgot what I was going to say. Sorry. But there's also a little survey here afterwards too, if you take the time, how we can continue to improve these deep dive product dives. But Xavier, use these programs. I'd love to have you, Xavier, share your success just by posting stuff. So, Christy, in closing, give us a tidbit that you've learned over your years here.
Well, I think the biggest thing that I would want to share, I don't know that it's necessarily a tidbit, but I just want to say that we're here to support you. We want to support you, and we're here to answer as many questions as you have and to walk you through that process. I can tell you that I constantly get this message from brokers when they have not originated a non-QM and they do a non-QM with me. They always say, that was so much easier than I thought. There's an expectation that these loans are difficult. And you know, I had one in particular, maybe she's on here, she did a bank statement loan, happened to be her first loan with me a couple of months ago. And she said that was far easier than I expected. And now this is the focus of her business. And she realized that she was missing out on an opportunity. And I have 2 more loans with her going right now that if she hadn't opened herself up to non-QM and really just considered it and given it a shot, you know, that's business she wouldn't have. So that would be the biggest thing, is we will walk you through it. We will support you every step of the way. And you're going to find that this is going to increase your income this year. And I think that that's a bottom line concern for everyone.
Very well said, Christy. Oscar?
I'm going to follow up with that and agree. You know, you weren't born knowing Fannie Mae, Freddie Mac, VA, FHA, but you started one day. And so you have partners in us, and we're here to help. So, you know, post-call, please reach out to us if you want to learn a little bit more about the debt service coverage ratio program or any other program. Every account executive here would be more than happy to schedule a conversation with you. It should take us less than 30 minutes, and you will become an expert.
Yeah, very well said, guys. I'm not going to even say anything else on top of that. This was recorded. We will get this out to you before end of day tomorrow. We really appreciate you guys taking, 79% of you on this call. Hopefully we'll close a DSCR loan within the next 2 or 3 months. And hopefully it's with Angelo. So for everyone here today, AJ, I know Carlos is your account executive. That's awesome. But everyone else, you've got great account executives across the country. For those of you who have closed loans with Angelo, we really do appreciate your business. And for those who will eventually close loans, we really do want to earn your business. So everyone have a great afternoon, and here's to the rest of a great year. Thank you very much.
Thank you.